Oh, let me try that again. I have no idea what's going on. Oh, the green screen's back. That was a terrible start to the video. I apologize, guys. Hello and welcome to Martyn Lucas Investor. My name is Sensei and you are watching the Morning Forecast Show. Thank you everyone for tuning in. We have war escalation plus jobs report in the jobs report will be dropping in 48 minutes and the war escalation is ongoing. We are seeing currently the Strait of Hormuz, there's ships being attacked plus ongoing military action. So that is escalating rather than ending as many were expecting after Donald Trump's remarks over the last few days. So let's see how that goes. Right now, oil is heading up as well. So let's get straight into today's stream and get ready for the jobs report. If you are here, let me know you are here in the live chat. Um, I want to see if anyone. Where's the shed? Says Ricardo. I'm sure a lot of people would have tuned into the live event on our private newsletter. The premium members would have seen a behind the scenes. Now people are seeing behind the scenes right now in the chat as well. So let me, we will fix that for next time. Anyway, let's get into today's show. So this is today's newsletter. The top stories are oil surges above $100 again. We've got bond gains erased, and that's causing lots of issues for everyone's portfolios around the world. A lot of pension funds, obviously, are sensible and put a amount of money into the bond market, hoping for some steady gains, but those gains have been wiped away as well. All the gains for 2026 for across all markets have been wiped out by now. Revolut, a big bank. Oh, a big, yeah, I guess it was a bank before, but now it actually gets its banking license here in the UK, which is a big deal, as they've been trying to get that for 4 years. Let me know in the chat. Does anyone use Revolut? Say yes or no in the chat. Revolut. I guess it's not in the US yet, although they are expanding their. I think in most of Europe. Yes or no in the chat. Do you use Revolut as a bank? Let me know. Because now in the UK, it's just got approved its banking license, so it gives you all that protection. It might bring lending out. In my opinion, it'll be the biggest bank in the UK in the next, I don't know, 4 or 5 years potentially. Gulf shipping attack spread. So this is what we're talking about. Escalation. The escalation is quite large right now. There is no which was my fear, and I voiced this concern that the war is escalating right now. It doesn't seem to be ending. Everyone wants this war to end, but right now so far what's happened is there's been no regime change. There's been Ayatollah Khamenei has been replaced by Ayatollah Khamenei. So that objective hasn't really gone to plan. Trump admitted a few days ago that the leaders that he wanted to overtake the regime, they were also killed in an explosion nearby. So are we buffering? Let me know in the chat. Are we buffering or are we all okay? Few weird things going on with the stream this morning. Anyway, there is some military objections not being hit yet and not being executed. So it does look like the war might be heading longer than expected, and oil prices, even after major intervention yesterday with emergency barrels being released, oil is heading up once again. Yes, all the time. Yes, we use audio, video, good here. Thank you, Silver Days X for your goods. Seems okay on this end. Thank you, Paul D. Let me see. Are people using Revolut? Yes, says Kurt. Ricardo says, any idea what caused SPY to be so volatile yesterday? Kept going up and down all day. We'll have a look at the S&P 500 yesterday, up and down all day. I mean, as I've said, we've entered a real volatile part of the market. The market will punish everyone. If you're long, the market's going to punish you. If you're short, the market's going to punish you. You just need to build positions for the long term, and forget about day trading these events. I mean, there is certain trades like oil. We that was very clear. We made 1,000% on oil last week. I mean, that's pretty incredible. And there'll be opportunities to buy stocks at lower prices, I think. And also, it's always great to stay invested. So we'll look at the S&P 500 in a second. Let me just go over. Is this going to work? Are we going to have issues? No, we're all good. The live chat, what's everyone saying? So, thank you, Ricardo, for your comment. Yes, use Revolut because paying abroad is free of charge. Yeah, I mean, there is still charges, but I think it's certainly better than any other card. There's also different plans, isn't there? Brian says yes all the time. Mark, Mark said, where was that? Mark says, good morning. Hi, Sensei. Silver Days XRP. Audio video good here. You're good, says Yolanda. Thank you, Paul D. No buffering here. Brilliant. Okay. Thought it was my Wi-Fi, so maybe a small buffering problem. No, it was probably, I think it's all sorted now. That was just a small issue, but we're all good. Crypto's running. Good morning. Yeah, Bitcoin, if we bring it up on the screen, is that going to yeah, we see Bitcoin up back above 70,000 as we speak. So if you have just tuned in, we're going to cover the escalation of the war. We're also going to cover the jobs report. That's dropping in 42 minutes. Yesterday we got inflation, today we get jobs, and tomorrow we get inflation. And then the FOMC is in less than a week. And then on the FOMC day, I think we get more inflation PPI. So we're getting a lot of data, all of this data coming in all before all referencing February before the war started. So the next sets of inflation we get in April will have the March numbers, which will take into account the oil shock. We're already starting to see some effects. I mean, if you guys have gone and filled up your cars recently, you would have seen that the price has gone up 10-20% in some cases. Video's good on my end, says David. Crypto's running. Yes. Guys, if you have just tuned in, no one's hit the like button yet. What's going on? Please take a second to hit that like button, subscribe if you haven't done so already. If you want to get today's newsletter and follow along and get the cheat sheet, then there is a link. If you click that, you get a free trial to premium plan, or you can go and sign up to the free plan. Both those links are the first links in description as well. Mark Pierce says, I'm off to bed very soon. Where in the world are you? Or were you working a night shift? Let me know, Mark Pence. Where in the world are you? We try this time should I think is the time that works for most people around the world because in Australia it's coming up to later in the day, and in the US everyone's waking up, and here in the Europe UK it's sort of midday. So Mark, let me know where you are in the world. So energy trap, global energy markets are entering a historic supply crisis as oil surpasses $100 again. Despite record strategic reserve releases, the conflict has expanded beyond the Strait of Hormuz to hit regional refining hubs and secondary ports. Let me clean this up. Yeah, it is escalating. The escalation transforms a simple crude spike into a structural shortage of critical finished fuels like diesel. As a result, the traditional bond market hedge has failed because inflation concerns now outweigh the typical flight to safety. Investors must navigate a Federal Reserve currently trapped between a cooling labor market, and we'll get more data in literally below me, you can see 40 minutes time, between a cooling labor market, we'll get more information soon, and rising energy costs. These conditions effectively remove the prospect of immediate interest rate relief. So mortgage rates, they're actually going up because the market's preceding what's going up. So in the UK, we've just seen mortgage rates slightly head up, and they're not coming down. And interest rates won't be coming down. I'm 100% confident next week we're not going to get any cuts, and we're probably not going to get any cuts for the next few FOMC reports. The Middle East has lost 4 million barrels per day of refining capacity due to the Strait of Hormuz closure. This disrupts the global supply and finished fuels like diesel and jet fuel beyond just raw crude production. I'm sure if we flip to one of these, this is Bloomberg showing the S&P 500 down as we speak, Nasdaq down, and the Russell down. Bonds slightly up. Let me go and see if we've got conflict between Israel, the US, and Iran has disrupted global energy supplies and markets. We are seeing some pictures come in there. And also here on Sky News, 5 vessels attacked in the Strait of Hormuz. These are all live images from the news networks. You can see all of them covering this. Iran attacks fuel tanks near Bahrain's international airport, causing a major fire. You can see just above my head there, and the breaking news story below. Iran renews attacks on ships in the Strait of Hormuz. So we can see that's Israel attacking Beirut, the center of Lebanon. So escalation is happening right now. It doesn't seem like we've got an end in sight. Joint U.S. and Israeli attacks have targeted Iran oil storage. Iran is targeting Gulf energy infrastructure and shipping responses. Uh, in response to Israel and U.S. attacks. So we're seeing that unfold as well. And Bloomberg, let's just switch to them.
Just at the Fed, we're seeing at the ECB, at the Bank of England. That's the front end of the curve. That's that story. Further out, when you look at something like a 10-year maturity, is this shock bullish or bearish, positive or negative for bonds?
It's bearish. I think it's bearish for bonds because we keep hearing about the potential stag part of stagflation. I actually am a little bit less concerned about that if we're talking about the US. The euro area is a little bit different. But if we're looking at the US, just to put things a little bit in perspective here, John, so far, as you noted, we've got Brent at around 97. The average price of Brent in 2022 was 100. And I would note that we came into 2022 with inflation already at 7.5% in January. And inflation rose, definitely, and it went up to something like 9.5%. But I'm just trying to put things a little bit in perspective here, because we didn't get a recession out of all of that. And I think while we shouldn't underestimate the gravity of everything we're seeing, I think it's premature perhaps to overestimate it. So to some extent, I actually think the market's getting it right here.
Well, that sort of explains why we haven't seen any kind of fear expressed in credit markets. In fact, they seem to be wide open, and I'm putting private credit aside. I'm talking about public credit markets. Do you think that that is poised to change if the long end of the yield curve continues to sell off and oil prices remain high, or do you think that the market's getting it right and this will be temporary?
So that's pretty much calling the end of the conflict, the war, and that's fairly hard to do. I think currently the best estimates markets are making is roughly around, most people assume 6 weeks, maybe a couple of months. And I think for that, we can actually overcome this. And I do think there's an extent to which, if we're looking at public markets, they're looking at the underlying fundamentals. And I don't think very much in the underlying fundamentals has changed via what's happening in the Middle East. Enormously disruptive as it is, the underlying fundamentals actually haven't.
There we go. That's Bloomberg. We'll bring you more from Bloomberg once that jobs report comes out. Interesting. They are talking about recession. Is it going to come? Is it not going to come? Well, at the end of the day, my thoughts have been pretty clear, and I'll make them clear again. I think this year is going to be a year of opportunity. I think there's going to be opportunity in the market. I think we're going to be in a bear market. We predicted the crypto bear market 7 months ago. We're in a crypto bear market. There's sales all over the place, and I think we're going to go low on crypto, whether it's in May or October. I think we're going to have a further capitulation. I think the stock market's going to cool off this year, whether it's due to AI fears and AI spending, or carry trade, or the war, or recession, or inflation. I think we're going to find potentially a bear market in the stock market. If not, opportunities will be dotted around all over the place. In terms of recession, I think there is odds of recession increasing, but I don't think we're at the point yet where I can say it's more likely than not we'll get a recession this year. I'm not at that point, but I am at the point of saying more likely than not we will head lower in the stock market this year and find more opportunity. I say there's a 50%, over 50% chance of that. That's why I'm more positioned for that, but I'm also positioned for everything to be amazing, the war to end, and tomorrow, and for us to go up. I'm positioned for all scenarios, but I'm a little bit more positioned for the market to go down at points of this year and to go down further and find that opportunity. I'm a bit more positioned for that. People keep asking me, is there going to be a recession? Is there going to be a recession? I don't know. And I don't think the chances of recession are over 50% yet. So that's why I'm not more prepared for that. But I am aware of that, and I do think it's creeping up. And maybe more than others, I think a recession could be a possibility this year, but it's still less than 50% chance, in my opinion. One of the main reasons being obviously oil prices as well now, plus our previous analysis going into this year before as well. and the end of the business cycle, really. So let me continue with some of those top stories. What's going on here? Hormuz tanker escort likely by the end of the month. So remember, there was those fake reports of a tanker has been escorted. That was all fake, and now the news story here on Bloomberg is saying maybe by the end of the month it looks likely that there will be a Navy escort, and Wright is saying Navy escorts can't happen right now. We are waiting for jobs reports, building permits, and housing starts. All that data will be coming out in about 30 minutes time. We know the consensus just above my head, and we've got a full cheat sheet so premium members can go ahead and look at that. We're not going to show too much of that cheat sheet today. We will cover those numbers when it comes to it. If you're trading that, then obviously I would recommend you go and see the cheat sheet. Even if you're not trading it, you might want to just brush up on what these data releases are and how it impacts portfolios for the long term. Some winners and losers in today's stock market. Let's go to our first story here. Oil blasts past $100 as the war hits your wallet. Let me just quickly go to live chat, make sure I'm not missing anyone's comments coming through. Good morning, Sensei, says Robert Elliott. Yeah, can everyone please hit the like button on your way in as well? And there is a poll running. Where will US jobless claims come in at? Ricardo says, oh no, is there a reason they don't want to talk about private credit markets? Have you taken a look at these market sensor, specifically BC and RCC? We are coming out with a deep dive later on this week about the credit markets. So Ricardo, I will come back to you on that. Jacko says, good morning, everyone. Lovely to have Jacko here. Robert Elliott says, hey, Mark. Yeston is here. Hello, everyone. Wadey says, I use Revolut in the UK. I use Revolut X for cryptos. Their fees are lower than normal Revolut. That is correct, Wadey. Brand says, should we all take small profits if we have them, or do you think crypto will go up from the report today? Again, I don't really trade based, like I don't make major decisions ahead of data based off where I'm predicting it to go, because no one really knows. I don't know why that's so hard. I don't think anyone can guess what the report will show. It's just normally if the market's mispriced, which rarely it is. So crypto's up at 70,400. What's the report going to be? Well, it's not the highest impact report, but it could certainly be go in either direction. So again, it's hard to say should you take profits. That's depends on your portfolio, and that's certainly not the way I trade, because I trade not guessing where the data is going to be. I look at the data, then make my informed decision. Because the other way around, normally 9 times out of 10 is gambling, unless you can find a mismatch in the market. But if you get the data and then make a decision, yes, you might be late. Yes, the market might have already moved, but you actually take a decision that's more long term for your portfolio based on the data you get. So I don't really give predictions ahead of data and say this is what's going to happen. Tag me on Sensei when the deep dive comes out, Ricardo. Yes, tag me on it, Sensei. Well, I'll let you know, Ricardo. I don't know how I can tag you on it. Just tread with caution, says Mark Pierce. Yes, exactly. Soundtrack Substack. Just tag me on. Okay, Ricardo, I'll let you know when it comes out. I'll let you know. Okay, so let's continue with today's report. Do you like Flare at 0.089? Yeah, Stevie, I like Flare, but we're in a bear market. And as I've said, every time we're in a bear market, these coins will go down 98%. And it's not really any different with Flare. Maybe in Flare will only go down 90% because it's high quality. Maybe Flare will go to 0. It's a small cap. It's a small part of my portfolio, and it's certainly a small part of my crypto portfolio, but is one of my favorite altcoins. I like to buy these altcoins when I think an altcoin season's around the corner, or when I see these cryptos drop 50%, then another 50%. So I'll buy Flare if it drops 50% in a bull market in case it goes higher, and then I'll buy another 50%. I don't really look at it at the price unless I'm trying to take a trade. So with Flare, I would literally just look at my portfolio. Has it dropped another 50%? If so, I'll just add a little bit more to my portfolio. And with most altcoins, I wouldn't even touch them until I think there's an altcoin. So around these levels, I've already bought on that big drop a few months ago at 0.0085. So it's not a bad level if you didn't manage to buy it before. The next level would probably be another 50% down from here. I might look to buy some Flare. We are approaching all-time lows, so I might look at another position, another 20% down, but it can go down another 50%. And if it does, that's when I'll add another significant chunk to my Flare portfolio if the fundamentals haven't changed. But yeah, flare is if you don't adopt that strategy and you want to look at what the chart's saying it's pretty close to all-time lows. There is it can go down another 4 to 7%, so around these levels before we get a significant bounce potentially. Okay, so I wouldn't miss out on the opportunity buying here. I did buy on beginning of February when we had that drop in the crypto market lower than these prices. So let me go. Let's see. Have a quick look at the odds for a ceasefire. When are they being priced in now? Oh, ceasefire. Oh god, it keeps getting pushed back. Now we're getting a ceasefire priced in. Actually, no, it's still the same, but it's the odds are decreasing. It looks like between April and May, and it looks like towards the end of May, potentially middle of May, it looks like the market is pricing in a ceasefire middle of May. So that means that, oh, what we now March, 2 months to another 2 months of this oil. I mean, if it's only 2 months and no more than 2 months, then yes, inflation will go up, but it wouldn't necessarily mean recession. There will be fears when we come into middle of May and we still haven't had the war end. If we go into June and way into June, then that's when I think it's gone on too long. Because when I spoke to Michael Burry, he had the set. Do I have that up right now? I don't. These are crude oil things. When I spoke to Michael Burry, he actually thinks it's short-term volatility, and he thinks the Fed will look through it because we're not at that stage yet where it's going on for too long. And I agree with him, but I do think it will still have a major effect on the Fed's policy. We are now 27 minutes away from the jobs report. We will be covering a few more news stories and then talk a little bit about the jobs report that's coming. Tesla flashing weird from 408 to 404, says World Free Speech. Tesla have got driverless taxis out. Also, oh, we've got a few Teslas. Everyone talking about Tesla in the chat. Will we be seeing Tesla around 300 to 350? Let's have a quick look at Tesla. I know there was a small trade on Tesla recently. Yeah, the breakout, but then you've got the resistance right above it. So there is a breakout of a downtrend, but then you've got your Sensei momentum band right above you, and we are releasing 2 indicators on TradingView to our premium members on the newsletter. So just testing them, they are pretty much good to go. The two most important, sort of the 4 most important moving averages, but in 2 indicators. So you are approaching the resistance band on Tesla. So yeah, it's not a trade I'll take, but I am aware that we can sort of get back above that resistance band if we're not in a bear market. If we do continue in a bear market and the markets continue to go down, then we are looking at Tesla actually just treating this as resistance and heading down. There's just 2 forces at play, and when there's 2 forces saying different things on a chart, I don't take the trade. One of the forces is saying we've just broken a downtrend, we can head higher, but then the other thing is we've got a cloud of moving averages just above us that will act as resistance. So we can go all the way up to 232, but it does look like some resistance is up ahead. I would probably more likely just keep an eye on the downtrend because we are in a downtrend on Tesla. We've had the double top, we've had the big move up, and now we're in a downtrend. If that downtrend continues, then we'll break $382, and when we break $382, there might be some opportunity closer to $348, or if we put the deep trend band, even $372 could be some level of support. So I'm not taking the trade on Tesla. There's just too much resistance up ahead for Tesla, and we are in an established downtrend for now. If that trend changes, then I might be back in for a trade, just slightly higher prices than we are at now. Oil currently up 4.5%, $92 right now. Obviously, Brent is higher than WTI. We actually saw Brent go as high as $100 earlier this morning in the Asian hours. Silver up 1.5%. I think silver is going to continue its uptrend, but again, maybe not go to all-time highs or blast past all-time highs. Bitcoin at 70,000. We're keeping an eye on the downtrend that Bitcoin broke recently. Gold, pretty flat on the day. Again, I believe gold will go to all-time highs. More likely gold will go to all-time highs than silver. The S&P 500 down again. We had that bounce, but yeah, we're in a downtrend for the S&P 500 now. It's pretty clear that we have had now lower lows. So we are waiting for that. We've probably had a lower high now as well. So it might be next is another lower low on the S&P 500, potentially another 3% move down on the S&P 500 over the coming few days could be very possible. The Nasdaq down 0.48% as well. The FTSE down 0.4%. Let's see how this all continues. Let's give you some more news stories. What's coming out of Bloomberg?
Through regional intermediaries, according to people familiar telling.
Tankers are now being hit in Iraq. Oman evacuates port. It is escalating as we speak.
Including that the U.S. and Israel would pledge to never attack the country in the future. At this point, it just feels like both sides are very far apart.
Tyler Kendall with the latest in Washington. Tyler, thank you. Stay close. Here's the view on Wall Street. Austin Kwon of Wells Fargo writing, it's a U.S. war. The US arguably has more control. De-escalation is bullish, but upside likely capped at 7K amid AI and private credit fears. Austin joins us now for more. Austin, good morning to you.
This is interesting.
Let's start with the December Brent contract. It's trading around 80. Is this getting harder to ignore, or can you continue to look through this?
Yeah, no, I think you're right. I think it really depends on the duration of this. Is it weeks? Is it months? If it's weeks and we're back to like 7-ish Brent crude, then I think we're sort of back to normal-ish macro cycle. And I think the underlying macro cycle was pretty healthy before this happened, right? I mean, we were talking about the manufacturing upcycle for the first time in three years. We were in a restocking cycle. The consumer was about to get a lot of cash from the tax return too, which is happening right now. So I think the underlying macro cycle is still pretty healthy. There are some bull cases too. Everyone's talking about bear cases, but there are some bull cases from the macro cycle. Everyone is hedged. There has been a lot of hedging activity happening, so the downside protection is there. Number two, liquidity cycle is in an upcycle. So in terms of the domestic liquidity, we're back at January highs, and I think that's what's really making U.S. equities more resilient versus other asset classes.
We can spend some time in the macro backdrop. I'm with you. The ISMs have been pretty decent. Park labour market, everything else has been pretty promising, particularly the fact we get these refunds, and there's a lot of capex behind us as well. But before we get to all of that, when this first started, people were coming on and saying, if it's days and not weeks, it'll be okay. And now we hear, if it's weeks and not months, it'll be okay. It's 13 days. Where on the calendar does it get real for you? Where's there a tipping point?
I mean, the administration last week came out and said that it's going to take about 4 weeks. So if it's really 4 weeks, then I think the market's sort of pricing in 4 weeks-ish time frame. I mean, I think, a lot of people are starting to talk about the analog of 2022.
The Wells Fargo.
And I think the macro cycle is very different versus 2022. First of all, we were coming out of the easiest monetary policy in 2022. The oil market had 2 years of deficits in 2020 and 2021, whereas 2025 was a massive surplus. So if this is really like a 4-week event, then I think we're going back to a more normal-ish environment, and I think equities are going to be fine. But at the same time, if this drags on for months, then we're talking about a very different story.
You said that the worst-case scenario now is about 6,000 on the S&P. What are you pricing in? I mean, what's the kind of worst-case scenario to get to that level?
If oil stays at around $100 and people start talking about more of a stagflation narrative, then I think, the worst case scenario is going to be about 6,000. The level that we're watching is 6,350 on the S&P 500. That's the VWAP of this bull market so far. So basically below that level, on average, people are going to be under the water in this equity market. And I think below that, we could potentially see more policy put, which could potentially provide more support to the equity market.
One concern, you mentioned liquidity.
Very interesting. So you can see these chief analysts, he did get it wrong about the 4 weeks, but maybe he's talking about 4 weeks from today. The market's pricing in middle of May right now as the war ending. So we're giving the benefit of the doubt. But also you see these chief analysts from these banks, they also use technical indicators. They use charts. He just mentioned the VWAP there as well. The VWAP there on the chart as well. So when we come out with this chart training course, which I'm working on every single day this week, and we're nearly there, we're basing it on actual facts. We're not basing it on just random stuff people like to sell in courses. We're basing it on actual facts, and as part of that, we are. Someone's just asked in the chat about the indicators. Yeah, we've got two. We're keeping it simple. I mean, this is going to be anyone can learn charts at the end of this chart training course. And as part of it, you get the two indicators. One is the Sensei momentum band, and one is the Sensei deep trend, which you can add to your own charts. And I would say those are the two most important ways of looking at moving averages and within the research, you can see that keeping it simple plus just looking at the trend, which the moving averages essentially show you, is the way to keep on the right side of the trade, and that's actually one of the top things to look at is the trend. And we'll explain that in the course. But Zapzone just said, "Do we have access to the indicators as a newsletter member?" Yes, you do. I'll tell you exactly how you get access to that in the training course video, which I'm hoping to get out in the next 5 days. So that could be the beginning of next week, could be this weekend. It depends how much longer it will take me to do it. But yeah, you do get access to it, and Zapzone, if you want early access to it, if anyone wants early access to it, while it's still it's pretty much there. So if you want early access to it before the actual training course comes out, you can private message me on the newsletter. So that goes to any premium members. You can private message me on Discord now, and I can. You have to give me your if it's probably best to wait because I explain exactly how to do it. But message me before you do anything, before you set up your TradingView account or anything, message me and then I can guide you through the process. So don't set up a TradingView account if you don't have one yet. Let me guide you through the process. Just message me saying you want it and then I'll give you how to get it. Anyway, yeah, that's for the premium members of the newsletter. So he said, that strategist said 6,000 is sort of the bottom. If in a bear case, that on the S&P 500, that would be a sort of another, from where we are now, probably another over 10% move down. He said the level they're watching clearly is 6,350. That's about 5% down. That lines up. That lines up with my chart, lines up with my levels. If we also throw in 6,350, that's exactly where that deep trend moving average is. And then we do have our secondary trend much lower, but that's coming up. That's the deepest level we look at on the moving averages. But you can see the let's say deep trend telling you 6,400, which is very close to 6,350 level. They line up, and then the 6,000 level will be at the bottom of the parallel channel we've drawn on the S&P 500. So if I agree, I mean, if the market goes into downturn, if stagflation, if people start actually getting scared, because there's not that much fear in the market yet. This is nothing. This is just looks like a topping out structure right now. We haven't broken anything to a big degree here. If there is fear in the market, and that could be caused probably by oil staying up or even by inflation, carry trade, AI cracks, credit market, whatever it can be, we can certainly get another 10% move down on the S&P 500, which would mean for individual stocks anywhere from 90% down to I don't know, 3% down. So, and obviously some stocks will gain on that as well. On stagflation, there's certain stocks that will do well. So I'm in agreements. If we are going into a bear market or if we are going to downtrend, I've got my specific levels on the S&P 500. The first one was hit and we had that bounce straight off it. Then it's 6,500, 6,350 or 6,400, and then 6,133 would be my levels on the S&P 500. So it lines up with what he was saying. Brent is now at $98, staying up, and crude at $93. Any more breaking stories? More than 100 settler attacks against Palestinians. Israel Defense Minister said joint Israel-US attacks against Iran will last as long as necessary. And here on Sky News, Iran renews attacks on ships in the Strait of Hormuz. Let's go back to our own newsletter and go to our first story, which is oil blasts past $100 as war hits your wallet. Just looking through the comments. Mark Pierce, you've started watching the videos today. Mark Pierce, that's version 1 of the trading course. That is actually out of date, and we're doing an improved version right now. So that has ended on the ones you're watching. So stay tuned because we're trying to make it into one video. So a lot more time's going into this one. So you might be watching the wrong. You're probably watching the old videos. Okay, so oil blast past $100 as the war hits your wallet. Brent crude surged as much as 10% today, briefly touching $101 a barrel during Asian trading and holding above triple digits for the first time in 2022. If you're watching live, 15 minutes until the jobs report. The move came despite International Energy Agency record 400 million barrel reserve release announcement yesterday, which the market shrugged off almost immediately. So we covered that report yesterday. We said it's most likely going to be announced. It did get announced, and it didn't do much, in all honesty. And that's quite concerning. So Goldman Sachs raised its fourth quarter Brent forecast and warned that if flows through the Strait of Hormuz remain depressed through March, daily prices could exceed the 2008 all-time high of $147. The futures market is flashing extreme stress. The gap between the two nearest Brent contracts blew almost up $4.50, up from just 61 cents a month ago, and that's between Brent and the WTI crude. A signal that physical buyers are scrambling for any available supply. The price spike is now landing directly in household budgets, and this is where the concern of inflation comes. Average US retail gasoline hit $3.58 per gallon this week, according to the American Automobile Association. That's up 20%. Consumer petrol prices. And this is detrimental to consumers. It's also detrimental to the midterm elections because obviously Donald Trump ran on reducing prices, and we've just got a 20% increase into consumers' petrol prices. Diesel is approaching $5 per gallon mark. That was last breached in 2022, a threshold that matters far beyond the pump because it's not just about normal people filling up their cars, it's about the full supply chain. So diesel powers trucks, tractors, construction equipment that move the real economy. Airlines are passing costs through too. Cathay Pacific announced today it will double its passenger fuel charge from March the 18th, and carriers from India to Sweden are following suit. More than 46,000 flights have now been cancelled across the Middle East region since February 28th, and the flights are still and the flights still operating are burning more fuel on longer routes as they avoid Iranian and Russian airspace. The IEA's owed monthly report today declared the largest supply disruption in the history of the global oil market, with 7.5% of world supply knocked out and an estimated 8 billion barrels per day lost in March. The agency also slashed its 2026 demand growth forecast by roughly 25% to 640,000 barrels per day, the lowest figure since the IEA began forecasting this year, suggesting it's already seeing meaningful economic damage. Crucially, 4 million barrels per day of regional refining capacity has been jeopardized by the Strait of Hormuz closure, which means the Middle East is losing the ability to produce not just crude oil, but the finished fuels like diesel and jet fuels that the world actually uses. Goldman Sachs 147 warning grabs the headlines, but the number to watch is diesel. Crude can spike and retreat. A diesel shortage feeds into the cost of every physical good that's moved by road, rail, or sea. And the loss of 4 million barrels of Gulf refining capacity means that this is not a problem more drilling can solve. So it is really becoming more ingrained, this oil problem. It's not just as simple as less oil is being produced, but we can put more oil into market. Well, they did that yesterday. They announced record oil emergency releases from storage, and that had no effect on the market. In fact, it's not actually really. It's being released throughout the year, so it's not really going to have a massive effect. We've got diesel prices going on. We've got prices of crude oil that you can actually have exceeding the price of WTI. So the price of oil is actually going up in that sense as well. And then I think in this story, we're talking about Oman's price of oil as well. So if we go straight into this story, which is global bonds wipe out all of 2026 gains as the oil shock breaks the playbook. If you have just tuned in, we are looking at the jobs report in about 10 minutes time as well. The Bloomberg Global Aggregate Index, which tracks total returns from investment grade government and corporate bonds worldwide, has gone flat for the year. It has been up more than 2.1% through February 27th, the day before the war began. That entire gain has been erased in under 2 weeks. US Treasury yields climbed to 5-week highs today as oil pushed back above $100, and German 10-year bond yield hit its highest level since 2023. What makes this sell-off unusual is that traditional flight to safety into government bonds during a war has not been materialized. The inflationary impact of the oil shock is outweighing the safe haven bid, meaning bonds are losing on both sides of the equation. The IEA's record reserve release was supposed to be the calming hand on the market. It has been anything but. The 400 million barrels sounds enormous, and it is by historical standards roughly 7 times larger than the 2022 Ukraine response. But the math doesn't work. The US proportion of 172 million barrels over 120 days delivers roughly 1.43 million barrels per day. Global consumption is actually around 103 million barrels per day. Citigroup estimates that each day the Strait of Hormuz stays closed, it costs closed costs between 11 and 16 million barrels of lost supply. So you can see Citigroup is estimating if the Strait of Hormuz stays closed, that's costing the world 11 to 16 million barrels of lost supply. The US, which is the biggest part of the 400 million barrels being released, is actually releasing 172 million barrels over 120 days, which boils down to 1.43 million barrels. So you can see there is still between, I don't know, 9 and 16 million barrels. Sorry, 9 and yeah, 9 and 14 million barrels in a lost supply. Even with that record amount of reserves being released. Also, as one commodity manager put it, the sheer size of the release, which is massive historically, 7 times bigger than the Ukraine crisis, that itself may have spooked investors rather than reassuring them, because it signals that the IEA believes the disruption could last far longer than the markets had assumed. Price surged on the day the release was announced, not the reaction anyone really thought would happen. Goldman Sachs economists pushed back their forecast for the next Federal Reserve rate cut from June to September, arguing that higher inflation path makes it harder for the Fed to ease anytime soon. The Fed is widely expected to hold rates steady next week, with traders pricing in a 99% chance of no change. Meanwhile, the stress is spreading to less liquid corners of finance. Morgan Stanley and Cliffwater LLC capped withdrawals from some of their private credit funds this week after a surge in redemption requests. Private credit funds invest in loans that are not traded on public markets, making them harder to exit quickly. Withdrawal caps can create negative feedback loop where investors in similar funds rush to redeem before they get locked out too. And this is where the panic can start. And we'll be covering credits markets tomorrow. I think we'll push it forward to tomorrow. Yeah, emerging markets as emerging market assets are also under pressure, with the MSCI Asia Pacific Index falling roughly 1.8% today, and the Philippine peso leading losses among Asian currencies as fuel importing nations bear the brunt. Remember, some of these places like Japan, 90% of their oil is just imported, so they rely heavily on this. We also saw China; they rely heavily on imports as well. But what they've done is some of their ships are still making it through the Strait of Hormuz because Iran and China are friends, I guess. And then, but also China, they refine the oil into petrol, whatever consumers need, and they give it out to some Asian nations. They've announced today that what they're going to do is they're still going to refine it, but they're keeping it for themselves. So there's also lasting impacts of this as well. So the Fed is caught between two fires. The February payrolls fell by 92,000 jobs, screaming for rate cuts. Oil above $100 screams for the opposite. Goldman Sachs pushing the first cut to September means both sides of the economies, borrowers, savers, stay under pressure with no relief in sight. We covered the Revolut story. What we're going to do now, here is a story on the escalation of the war. The geography crisis expanded significantly today. 2 oil tankers were attacked in Iraqi territories, prompting Iraq to suspend operations in its oil terminals. The vessels were hit. Iran continuing to strike Gulf states with different ports being hit. There's more stories on that. Also, China ordering refiners to cancel fuel export cargo. So a lot of stories on oil and how it's affecting all markets now. And then here we go. This is the deep dive for 4 minutes time when that jobs report comes out. I know people that were more interested in this have already gone to newsletter and seen this. But yeah, we're getting 3 releases in about 4 minutes time. So please hit the like button, subscribe if you haven't done so already. If you want to get that newsletter that indicates that coming out, the training course, the daily news, the cheat sheets, the net worth trackers, there is a link in the live chat. It's also the first link in the description. 3 releases: initial jobless claims, building permits, and housing starts are all coming out in 3 minutes time. The economy just printed a negative 92,000 jobs report. Oil is above 90,000 on Iran war, and the Fed meets in 6 days. This is the most important weekly claims number in months. So setting the scene, Fed rates 3.5, payrolls negative 92,000, unemployment is edging up, CPI was in line yesterday, crude oil is up near $100 and staying there. June cut probability has now been is lower, and we're now looking at rate cuts in September. Initial jobless claims, what is this? Well, this is the main number I'm going to be looking at today. The number of people filing for unemployment insurance for the first time in a given week. It is the most timely official measure of layoffs in the US economy with only a 1-week lag. Hard administrative data. This is not a survey. So where has it been? It's been roughly between 199,000 and 237,000 over the past 12 weeks. The 4-week moving average has been falling from 220,000 to 215,000. In the most recent reading, the last 2 weeks printed at 213,000. So the market is pricing in, and this is the number you look at, is the consensus. So let me just go over to Bloomberg, make sure that what we're going to do on Bloomberg is fast forward. If I can urge everyone, if you're watching live right now, make sure you are actually watching live. Go to the playback speed and put it on 2 times or whatever, and make sure that there is a red live button so that you can be right up to date when that data comes out. This is the numbers we're going to be looking at right above my head over here in 3 minutes time. So let's quickly go back here for that. No, that's the wrong one. There we go. So yeah, the consensus is 215,000. The more it deviates from that, the bigger the impact on the market. I'll put the market on the screen as well. You can see we're sort of trending down on that. That's why the market, the Fed is saying they're not as worried about the jobs market as they used to be. So if we get in line, again, I don't imagine the market will move too much, but if we get core numbers, the labor market's holding, that's lower numbers. So if we get low numbers, below 200,000 or below 205,000, then that's tighter than expected, pushes on recession, but reinforces stagflation worry. Lower on delayed cuts pushed out. So the cooler is, the lower the number is, the later we get cuts, because less people are unemployed, essentially. If we get hot numbers, if we get 240,000 plus, so we're looking at 2 extremes right here. Obviously, there's in between. So if we get very low numbers, if we get very low below consensus, below 200,000, rate cuts pushed out. If we get very hot numbers above 240,000, then what we get is alarm bells. On top of a negative 92,000 payrolls, narrative shifts for 1 bad month to accelerating deterioration. So we'll probably get a sell-off in the market if that happens. That's when we might get emergency rate cuts, which is something no one really wants. People like rate cuts, but not emergency rate cuts. So high number bad, low number good. Essentially, if we want to keep it as simple as that, of course, in the cheat sheet, you'll see the other numbers as well, what's important and what to look out for within. It's not as simple as that, but if it is as extreme as that, then it kind of is as simple as that. So we're 21 seconds away from that. If we do get hot numbers, but not very hot numbers, so if we get 225 to 240,000, then that's when rate cut probabilities go up, and it's actually kind of good. So bear that in mind. Very high numbers, bad. Slightly high numbers, okay for the market. Let's go over to the breaking news.
Market going into some jobless claims data. Equity futures are negative by about 0.6%, down by 1.3 on the Russell in the commodity market. 119.50, the high of the week so far. That was Sunday evening. Overnight triple digits once again, and Brent crude not too far away at the moment. 98.60 and up by more than 7%. We'll get into that in just a moment. Let's talk about the economic backdrop, the jobs market. Mike McKee has more. Morning, Mike.
Good morning, John. Well, the low-fire economy continues. We're at 213,000 for initial jobless claims last week. That's down from a revised 214,000 the week before, and it's just about where we expected to be. So it doesn't suggest that companies are giving up on their employees yet. Continuing claims, 1,850,000. That's down from 1,871 the week before. Other numbers out, a smaller than expected trade deficit for the month of January, negative $54.5 billion. That's down from negative 72.9 in the month of December. Imports were down by 0.7%. Exports up by 5.5%, suggesting there is some tariff effect at work.
Stay with me. I'll give you full analysis. Then we'll go into the breaking news about the oil markets.
Month of January, a big surprise. The anticipation was for a decline of 4.5%. Bad weather, of course, one of the major culprits. Building permits were down 5.4%. The expectation was for negative 3.1%. So more pessimism on the side of builders, but not as much of a weather impact as people thought. So some overall really pretty good news for the economy given where we are at the moment.
We'll take that, Mike McKee, without a doubt, particularly following that dreadful payrolls report just last week. Michael McKee there breaking down jobless claims, coming in at 213,000. The estimate was 215. Claims have been really, really stable. And I called it a dreadful jobs report, but over the last 12 months, if you stripped out healthcare, it is pretty ugly out there for hiring.
We would have been in a jobs recession of sorts in a lot of different industries. We've seen a lot of people struggle to find jobs in terms of the time, but the amount of firing hasn't really picked up, and there is this equilibrium because of an aging population and a lack of immigration. I just wonder if this is a good thing or if it just adds to the complication of what we're talking about, certainly for the Federal Reserve. Is there enough here for them to potentially cut rates, be more sensitive to the job side of the market, given the inflationary shock, at least in the near term? And ultimately, the market seems to be suggesting not so much based on the fact there's only one rate cut priced into the market for this year.
Equity futures gone into the opening bell about an hour away, negative by 0.7% on the S&P 500. In the bond market, turning to fixed income, yields down by a basis point through the curve, 2s out to 30s, 10s are down about a 1 basis point to 421. And of course, staying on top of crude for you, Brent 98 and up by close to 7% on the session. Nita Richardson of ADP joins us around a table here in New York for more. Nita, good morning.
Good morning.
The labour market. Let's just start with the labour market, then we get to the broader economic backdrop. Just how fragile are things, particularly the insight that we got from the payrolls report over the past week?
You know, John, this is a peculiar time because it's a time when you have to separate a pretty strong labour market with very weak hiring. They are two different things. And if you look at the hiring we've seen, it's been concentrated in certain industries. And so the labor market overall, Mike McKee just reported it, there's very few firings, there's very few layoffs. We're at historical lows. It's pretty strong. It's pretty robust when you look at pay gains. But the hiring is weak. The uncertainty is leading firms to be more cautious. And that is the distinction that is hard for people to get their minds around.
Do you expect those two differences, those conditions to reconcile?
Eventually, sure. I mean, we're actually seeing at ADP a pretty solid hiring path. We reported on Tuesday that as of February 21st, hiring was tracking over the last 4 weeks at about 60,000, which was in line with what we said for the February ADP report. That's very different than what the government is showing right now with that February report. But what you're going to see, I think, is a lot of choppiness. The reason why the markets didn't really respond to this low number for February from the government payrolls is that they averaged January and February, and they got right around what they expected for that 2-month average. And that average is the point for the markets, but it's not the point for Main Street. That volatility matters a lot. And if we are indeed seeing huge swings in hiring from month to month after it's been seasonally adjusted, that is not a great place for workers to be right now.
There also is a sense that a lot of this hiring, as John alluded to, is really concentrated in healthcare. It's concentrated in a couple of industries that are counter-cyclical to any kind of economic growth. Do you see any expansion, broadening out, a sense that this is a broader hiring that can take place eventually when there is some sort of emergence from the stasis?
You know, we actually saw a broadening out in construction jobs, and I think that's
Okay, talking about employment, there the numbers there. Again, the numbers came in at quite close to consensus, so nothing major to report there. Um, there's many ways you can twist that story. If you look at the underlying numbers, we will continue to analyze that story. But the main thing we're looking at today is oil. So if we go back up to some of our other stories and the escalation, if we go over to see what China is doing, because China is doing something very interesting which will affect markets close by. China orders refiners to cancel fuel export cargoes. So take a look at this story. Again, this story is taken from our very own newsletter. If you want the newsletter, if you want the cheat sheets for all these data releases, yesterday's cheat sheets for we did one for CPI today. We did one for the jobs report. Tomorrow's going to be probably the biggest one, which is PCE, and then next week is going to be an even more important one because it's FOMC plus PPI on the same day. So lots of cheat sheets coming out for you guys in the newsletter. It's a part of the daily newsletter in the deep dive. And the FOMC one will be a separate newsletter. But you get all of that. You get the daily news, you get the daily headlines, you get the ad-free experience, the top stock movers, you get my thoughts on each story, you get the chart of the day, deep dive research, weekly crypto reports, the one-on-one DM access, the private community, the financial planning tools, the portfolio insights app, as well as the chart trading course with the 2 indicators as well. As the private chat, I do give you my thoughts on the market. Some of the trades I do, again, I don't give you every single one of my trade setups. That's not what I do. I do have a portfolio challenge which we're tracking, and also sometimes give some of my trades. For example, we gave you all the oil trades. I think there was 1,000%, between 200 and 1,000% profits on some of those oil trades we did last week. So if you want access to all of that, you can get a 1-week free trial on the newsletter. The link is in the live chat as right now. There is a free plan, there is a monthly plan, and there is that free trial if you go for the oil. Sorry, if you go for the yearly plan. I'm just reading the comments here. Was Mark from Australia then? Mark just said good night. Thanks for your coverage. No worries, Mark. Yeah, the jobs report. Again, sometimes it's at consensus, sometimes it's wildly out of tune, and today it was very much at consensus. Nothing really to report apart from everything that's in the cheat sheet you need to understand there. Knight to Aussie land. Agree. Are we avoiding the panic? Yeah, no one should panic. Panicking is what gets is what makes people lose. Everyone thinks it's going to go down now. You know what to do. Extreme fear reading also. The fear and greed index isn't really at extreme fear. Crypto has been for a while because we're in a bear market, but we're not really at extreme fear on the stock market yet. But when we are, it could be a buying opportunity. Physical oil in the Middle East and Asia is trading about 10% higher than the paper price. They're manipulating the oil prices down to keep panic away. And you are correct on that as well. We will read that story. I think it's the one above. But let's just start with China for a second. So Beijing has ordered the S&P 500 continuing to move down now. Bitcoin slightly down as well. Beijing has ordered its largest oil refiner to cancel already agreed export shipments of gasoline and diesel, escalating an earlier directive that stopped short of mandatory cancellations. The National Development and Reform Commission, the NDRC, China's top economic planner, instructed PetroChina, Sinopec, CNOOC, Sinochem, and Shenzhen Petrochemical to halt outbound fuel cargoes, with exceptions only for international jet fuel refueling and supplies to Hong Kong and Macau. China ranks as Asia's 3rd largest fuel exporter, behind South Korea and Singapore, and its vast refining sector primarily serves domestic demand. But even as a relatively small exporter, the decision signals that Beijing is prioritizing domestic supply security over export revenue, a sign of a genuine concern about duration and severity of the disruption. So what China's doing is very interesting. They're not actually the biggest exporter, even though that's what you might think, but they are one of the largest in Asia. And what China's government has basically instructed these private companies to do, some private, some national companies, is to stop sending refined fuel out. We need it for ourselves. And the impact is likely to not show now, but from April onwards. since most March cargoes have already been fixed. But for Asian-specific fuel market, this removes a supply buffer that importing nations were counting on. At least 2 Chinese refineries, Xizang Petrochemical and Sinopec's Fujant plant, have already begun reducing throughput this month as the cost of crude climbs. Combined with the IEA's warning about 4 million barrels per day of Gulf refining capacity has been knocked out, the loss of Chinese fuel exports adds another layer to tightening global diesel and gasoline picture. Wholesale diesel prices in China have already jumped 13.5% since the war began. When the world's largest importer of oil starts hoarding fuel, it tells you something about how long Beijing expects this crisis to last. China does not make moves like this for a disruption that they think will end in days. They wouldn't do this if they thought this would only be days or a few more weeks. They think this is going to go on longer, or at least they're planning for that. And then we're seeing shipping attacks across the Gulf and war as the war footprint widens. So the geography of the crisis expands significantly today. And we're seeing this across all channels right now. We saw it on Bloomberg earlier. They're just on a break right now. We've seen it over here on Sky News. Iran renews attacks on the Strait of Hormuz. And we're seeing it across the different channels. They're all covering it right now. Some of them on ad breaks. We'll come back to them. Let's continue the story. So 2 oil tankers were attacked in Iraqi territorial waters, prompting Iraq to suspend operations as its oil terminals. The vessels, the Martian Islands flagged Sea Safe, Vishnu, and the Malta flagged Zephyrus, were struck by Iranian explosive laden boats. Separately, Oman evacuated all vessels from the Mina Al Fahal oil terminal as a precautionary measure. This is significant because the Mina Al Fahal sits outside the Strait of Hormuz and handles roughly 1.1 million barrels per day of Omani exports, making it one of the last functioning exit routes for the Middle East crude. The port was reopened after several hours, but the precedent has been set. Even ports that were considered safe alternatives to the Strait of Hormuz are now vulnerable, which is very, very obviously concerning because no one thought those would be affected, the ones outside the Strait, and they are being affected. And then also, Iran has simultaneously broadened its strikes across Gulf states, with military operations increasingly reaching densely populated areas. In Dubai, drones struck buildings in the Creek Harbour and the Al Badaz district, and on Sheikh Zayed Road, one of the city's main arteries. Goldman Sachs and Citigroup both told their Dubai staff to stay away from offices, and Citibank closed its UAE branches through March the 14th. This follows Iran's Joint Military Command declaring banks and financial institutions as legitimate targets. In Kuwait, drones hit the international airport, causing material damage, and shrapnel from interceptions damaged 6 overhead power lines. In Bahrain, fuel tanks at the Merak facility were struck, leading to APM terminals to suspend port operations in Khalifa bin Salman port through March the 13th. Let me close this poll now because that poll is ended for the jobs report. Let me start a new poll. Is how long will the war let me see. Let me reword that because that's a bit confusing. When will the war end? Let's do a quick poll. March, so this month, March, April to May. I'm just doing a new poll for you to see what everyone's opinions are. March, April, May, June, and then July onwards. When will the war end? March, April, May, June. Does that make sense now? June, July, sorry. July. August. Let me just make sure this poll makes sense. Yeah, when will the war? March, April, May, June, July, August. Let me know, because that's what will be the most important question that the market, again, when is the war going to end? That's what's going to depend on if we're going to head into a recession, or how long oil prices are going to stay up, or how much of a barrier how much of an effect this war is going to have. So where were we? The pattern is clear. Iran is persuading a strategy designed to make the entire Persian Gulf region too risky for commercial operations, not just the Strait of Hormuz itself. And the question is, did the US know that they would be so successful in doing that? Because what Iran's got going on now is probably, I don't know, obviously Iran and, US and Israel are the ones that are attacking Iran with those large bombs every day. But then there's also all of the supporting nations, all the Gulf states and NATO and the UK and France that are defensively protecting as well. So there's about, I don't know, 15, 16 nations against essentially one country. Did the US know that they're going to be able to still have this much of an impact on the world and oil, and would they still have this? I don't know. Let me know in the chat. Do you think did you think that they would have this much of an impact? I don't know. Did they miscalculate it, or was this all part of the plan? We might find out in due course. So the pattern is clear. Iran is pursuing a strategy designed to make the entire Persian Gulf region too risky for commercial operations, not just the Strait of Hormuz itself. This changes the market's risk calculation fundamentally. Excuse me. Until this week, investors were pricing in Hormuz disruptions with workarounds via alternative ports, and even they started pricing in on that false report from the White House, which was that a ship has passed through with U.S. Navy support. That didn't happen. That assumption is breaking down, and this is the interesting part. Oman crude, one of only two grades still eligible for setting the Middle East Dubai price benchmark after varieties loading from within the Gulf were excluded last week. The Oman crude is trading at $132 a barrel today, a roughly $32 to $36 premium over Brent, and that's Brent is about $3-4 ahead of WTI. So that reflects the scarcity of oil that can actually be loaded and shipped. The market is pricing in oil that you can actually get to you much more than oil that's just in the ground. So the Oman crude premium over Brent tells you something the headline price does not. At $132 versus roughly $96 to $100 for Brent, the market is saying that the ability to physically move oil is now worth more than the oil itself. And remember, this is what people need to get their head around. It's not just these headline numbers. Remember back in 2020 when oil went negative. It wasn't the price of oil, it was the fact the shipping was too expensive. It was the fact that where the hell do they put all of this oil? There is all of this oil being pumped, and it has to continue to be pumped because that's how it's made. But they have nowhere to store it because no one needs oil. So it's not just what's the oil worth; it's the infrastructure around it. So right now we're having the opposite effect. We're not having enough oil that is shippable. So oil that is shippable is worth more. Back in 2020, oil prices went negative because there was all of this oil and nowhere to store it. So it was actually expensive to store oil. So you have to look past the headline and see what's actually going on. And right now, oil is more expensive than it seems because the oil that's being priced is all the oil potentially in the ground. What's more expensive and what's going to have an impact is the actual headline price, the price that people will be paying to have that oil delivered to them, to actually have deliverable oil rather than oil just stuck in the ground. And that's where there is actually, people will argue, is oil actually at $120, $110? What's the premium on oil that's actually going to be affecting the world rather than just what is the oil price for oil in the ground? So let me continue. That was another story you missed earlier, but we can go on to it now. Which story did we not cover? Oh, we did the global. Yeah, done that one as well. Okay, so let me quickly tell you about Revolut. So Revolut finally wins its UK banking license. This is quite a big deal for people in the UK. After many years, finally, it's actually a bank. So Revolut secured a full UK banking license yesterday from the Prudential Regulation Authority, the PRA, the Bank of England's regulatory arm, ending a process that began in 2021. The $75 billion fintech company, it's quite a large company. They've done very well. I remember going to the London events in 2019 when they were worth not even $1 billion or just about $1 billion. The $75 billion fintech company can now operate as a fully licensed bank in its home market, offering lending products to 13 million UK customers and bringing their deposits under the Financial Services Compensation Scheme, which protects up to £120,000 per person if the bank fails. Previously, Revolut's UK customers sat within a less regulated electric money license with no deposit protection. The company entered a restricted mobilization phase in July of 2024, which took significantly longer than the standard timeline because no company of Revolut's size had ever gone through the process before. The license unlocks far more than lending in Britain. Chief Executive Nick Stornonsky has publicly said that the drawn-out UK process was blocking Revolut's applications for authorization in other countries. The company applied for US banking charter from the Office of Comptroller of the Currency, the OCC, earlier this month, and clearing the UK's hurdle removes a significant obstacle to American expansion, Revolut's largest growth opportunity. The company has announced plans to invest $10 billion across its global operations over the next 5 years, launch in 30 new markets by 2030, and it's still weighing a stock market listing that would rank it amongst the largest European tech offerings in years. The real prize is actually US banking license. Getting the UK done was a prerequisite, not the destination. If Revolut secures a US charter, it enters the most profitable consumer banking market in the world. For incumbent UK banks, the lending threat is real but gradual. For Revolut's IPO valuation, the US story is what moves the needle. So I think they want to expand to the US and then IPO. So very interesting stories there from Revolut. That is a welcomed news story here in the UK. Let's go back to Bloomberg. Let's see what they're discussing. I'll come on to your questions, then give you my final thoughts on the market. And Martyn will be live, I believe, in 8 minutes.
More risk needs to be priced in to particularly lower rated credit, given potential contagion coming from private credit, given the fact that there could be some pressure on the more stressed balance sheets.
Yeah, so the question here and the key word here is opacity, right? There's a lot of opaqueness with respect to private credit, particularly. We see what's happening with BDCs. We see what's happening with retail-driven private credit exposure. And there are lots of questions around valuations, around liquidity. Will I be able to get my money back? Is this thing worth what it actually was? And I want to kind of bring in maybe a bit of a different lens because there are a lot of questions around how systemic is this? And of course, we never know ahead of time because if we did, we'd put guardrails against it. So we don't ever know what's systemic ahead of time. But one kind of avenue is potentially the insurers that have increasingly more exposure to that universe as well. You know, insurers own something like $2 trillion of private credit, which comprises 18% of their overall bond holdings. And that's not just private. It's a combination of, you know, lending to middle market, CLOs, BDCs. So BDCs are actually a very small part of their portfolios. But alternative asset manager-owned insurers own a significantly larger component of these things, and BDCs included. So you do have just more risk-taking on the part of an industry that historically has invested in investment-grade credit, right? And now is taking more and more risk in high yield and in illiquid, you know, unrated or lower-rated credit. So is that potentially a channel for a systemic, you know, disruption of some sort? But we'll leave that aside for now. We definitely believe that this credit cycle, which is the longest one we've had really on record, we haven't had a credit cycle in a decade at this point. We do think that it is very ripe for a turnover, that it's coming to an end, and that you are going to see meaningful repricing, not just in these structures that, you know, are BDCs or private loans, but it is going to spill over into other forms of credit in the broader markets.
We heard something similar from Apollo as well. Oksana Aronoff there of JP Morgan Asset Management on the channel for potential contagion. Getting visibility on these things is really difficult too, because one of the firms we were talking about overnight, their move to limit redemptions was essentially a fund of funds. So tracking where the money all is and where the money's being pulled from is getting harder to do.
Which is part of the problem. And at what point do people just start demanding transparency in order to have confidence to invest? I thought it was notable that Apollo came out, that we heard, of course, from John Zito saying we're planning to release pricing every single day because guess what? We're going to show we're not a bad actor and we're going to show what you should be doing. So, watch for more of the same.
Putting some pressure on the competition in some ways, I'm sure.
I have no doubt.
Yeah. Brent crude this morning, 98, higher by 6.6%. Coming up tomorrow, Jordan Rochester of Mizuho, the Port of LA Director Gene Soroka, Jill Carey Hall of Bank of America, and the Flexport CEO Ryan Patterson. Looking forward to getting to the weekend, as I'm sure you all are too. From New York.
Oh, I'm muted.
At Frankenmuff tipped $2 through Super Chat. You're muted.
Oops. How did I not even have the live chat there? What's going on? Thank Frank and Muff. Thank you so much for making me aware. How long have I been muted? What have I been said? That's so. Oh God, I haven't done that in so long. I was so proud of myself, and I've done it. Thank you guys. Sorry about that. At least the engagement went up. At least I got a super chat out of it. Thank you, Frank and Muff, for letting me know, and everyone else. I don't know why that didn't happen. 3 minutes. Oh God. Oh God. Normally the live chat is there, and it just was paused on a chat higher up. So I apologize for that. Where were we? Tomorrow, PCE, biggest data release of the week. There's a very simple way of checking these things. If you get to sense it, if I just show you, if you ever want to know what's going on the week, obviously you get the newsletter throughout the week, on Sunday or Monday, on the week ahead. You can just save that in your emails, or you can go to sensei.news, go to the top, which you get all the different summaries. So the XRP weekly or the morning forecast, the portfolio challenge updates, the week ahead. If you go to the week ahead, also the cheat sheets there, but and the app we've released for the net worth tracker. But if you go to the week ahead, you get the calendar of the week, something we've started doing as its own newsletter, so it helps people. So you go to sensei.news, go to the week ahead, click on that. Muted since you turned off Bloomberg. Thank you. Nappy Fund. Thank you, Nappy Fund. I love it. Go to the week ahead, and as you can see at the beginning, what's the most important things of the week. And the two most important things were US CPI, which we got yesterday, and then US GDP and core PC, which we'll get tomorrow. So tomorrow we're getting US GDP, and again, you can just scroll down, see exactly what's happening on each day and the timing. So Friday, tomorrow, we're getting US GDP and core PC, which will be the biggest sort of event of the week. And Oracle was the third biggest event, which we saw unfold, and we put it in the newsletter yesterday. So on that, let me actually, no sound. Brandon Hash, I think you're a bit behind because you're saying no sound now, but there is sound. We also got Martyn's live. That's something else I mentioned. That's going to be live shortly. Let me go back up and answer everyone's questions. It's getting hot in the kitchen. If you have not gotten sent his newsletter yet, I'm telling you, you're honestly missing out tremendously. He doesn't pay me to say this, and I'm telling you because I honestly love it. And I start my day reading it. Thank you, David Hensley. Really appreciate it. I'll give everyone the link to that as well. Did we end the poll, or is the poll still running? Vote in the poll, and then I'll end it as soon as everyone's done voting in the poll. Is gold going out today then? I haven't looked at it. It's getting hot in the kitchen. M. Taylor says, it's a great newsletter. I appreciate the hard work you put into it together. Thank you so much, M. Taylor. And we're going to add the final big thing, which is a training course, literally in the next 5 days. So then it's going to be a complete package. And then little things will get upgraded. So recently we've actually upgraded the daily newsletter because now I can spend more time writing the actual stories by automating the top movers. Not really automating, it still takes about half an hour to do the top movers every day, but it reduces the time, so now I can spend more time writing the daily newsletter. So you see these small improvements every day. So if anyone stopped reading the newsletter, try and get into it again. It is better than it's ever been. The damn dentist says, agree, fantastic info in the letter, worth it for sure. Thank you so much, the damn dentist. Yeah, I mean, depending on when you got into it, I mean, at the beginning, the newsletter was like, what was it, a few dollars a month? Or $30 a year or something like that. Then obviously, as new features rolled out, the price has increased. We want to everyone gets grandfathered to whatever price you join at. That's what you stay at, and the price just goes up over time. So the earlier you get in, the better. So maybe when the training course comes out, there'll be another price increase. But again, anyone who's already got it, get it. And also people have got it at discounts for their first year as well. So I think most people are probably maybe have got it on a promotion. So it works out to literally maybe $10 a month. So per edition is probably like, I don't know, not per edition, but per week, maybe it's like $2. It's like a coffee a month or a couple coffees a month. I mean, and even if you got it at full price and not a discount, I mean, it's still the amount of information in it it's I would say it's worth it, but obviously I'm going to say it's worth it thanks to everyone who else is saying it's worth it. Ganda says not anytime soon. We are getting the truth, and the media has been constricted to tell us the truth, including we're not getting the truth about what's going on. The media has been constricted to tell us the truth, included Al Jazeera. Ganda, I'm not sure what you mean there. I don't think we ever get the truth, no matter where we look. I don't think Fox Business tells us the truth, or Fox News tells us the truth either. I don't think any politician tells us the truth either. We just have to do the best for ourselves. More Monkey Business says, war has been going on from the day I was born. David Hensley says, too much coffee for me today. High Energy says, keep your eyes on Tesla for drops to 402. Big drop in car sales globally. His newsletter really is the... Thank you, David Hensley. Physical oil in the Middle East and Asia markets is trading about 10% higher than we've just covered that. Thank you. How's the jobs report? I'll give you what was the synopsis of the jobs report. So it was slightly below consensus. No big signs of labor cracks. Continuing claims was in line. Housing starts was quite a big beat. So builders are breaking ground at a pace of higher than anyone expected. Building permits are down 5.4%. So permits fell while start surge. That's a diverging signal. Builders are acting on old permits, but they're not pulling in new ones. So essentially the claims were steady, housing mixed, but headlines were strong. Trade balance is a big beat. This sits firmly in the better in the sort of the best case scenario of the matrix. It could be better, but it is the numbers today were at consensus. They're pretty good. No real. They could have caused real panic in the market, and they didn't because the numbers were okay. But again, they weren't the most important numbers. Tomorrow will be PCE. Muted. Oh my god, what's going on? Oh my god, that was probably the longest. I hadn't done that in so long. I was so proud of myself. I thought I went deaf. You're good now. 3 minutes. 3 minutes of muted me. That must have Oh, actually, everyone stayed. I would have said everyone would have dropped off the live. Everyone stayed. Maybe I should stay muted more often. People end up staying longer than if I just keep talking. We pay good money for this, Sensei, says Multi. What's this? There's a way to collect money. There's also a way to collect money. We pay good money for this, Sensei. Multi, what do you mean we pay good money for this? What are you talking? Oh, the nappy fund. What's going on? Oh, you're talking about the show, Muted. You pay good money for it. It's free. The show is free. Brand your stream is slow. He's unmuted now. Sound is good. I didn't have a morning ritual before the newsletter, so technically it's changed my life. Moderative, I love it. Cody is I think we've spoken to Cody a few times on X Spaces. Cody, lovely comment from you. Thank you so much. Sound is good. I didn't have a morning ritual. It's changed your life. So yeah, I'm going to put that at the top of the newsletter. Changes people's lives. To be fair, I think the actual training course, which is coming out very soon in the next 5 days, the final piece of the puzzle, it could change people's lives. And it's so different to what you'll see other people charging thousands of dollars for. It's based on literally academic research, tons and tons of academic research. And it's super simple. Like what actually works in charts is super simple. So it's just going to be part of the newsletter. I'm not going to sell it for $1,000. It's just going to be part of the newsletter, as promised, and we will deliver on it. Maybe a chance to increase gold, and the two indicators as well is going to be released as well. Two indicators. Are we bullish or bearish on crypto today from the charts? We can have a quick look. I'm not good at reading them yet. Can't wait for the new training videos. Brand the training compared to the old trading videos, 20 times better. It's taken 6 months, but it's better. Maybe a chance to increase gold price. Let's have a quick look at the crypto markets, and let's go over to Martyn, who will be live with XRP today. Again, you can use the charts for short-term trading, day trading, and looking at, are we going to be up or down on the day? That's not my preferred way, because then you're more likely to be exposed to emotional trades if you're trying to trade in and out. I'll be looking at longer-term trends. So for Bitcoin, it's pretty simple. We are in a downtrend. However, we've broken that downtrend. We got a surge on the first time we broke the downtrend, and then we came back to retest the downtrend, and we're now heading back up. So for me, it's 74,000 next for Bitcoin, or are we going to start rolling over? But if we break 74,000, that's the trend basically ended, and that could be a quick surge to 90,000. So I'm keeping an eye on this trend ending, but I'm also aware that there is obviously factors outside charts that can turn this into a lower high and then head lower. But for now, Bitcoin is breaking out towards the upside. And remember, the market will punish both sides. So we can certainly see a surge on Bitcoin. If we're looking at XRP, then 138 is very key. If it holds 138, we can have a big surge to 157. If we don't, then you have to be prepared for the downside. So there is not one major short-term clear direction. The longer-term direction that the charts are showing, and this can end if the trend ends. But right now, the trend is very much the downside. If the trend continues, we are looking at 2 more capitulation events if you put it with the 4-year chart. So we are looking at May potentially, or April, May, break 60,000, and then maybe October again, going to 50,000 before we bottom out. And that's when it's going to be interesting, the bottom out structure or the change in structure. That's what the charts will help us with, is have we bottomed out? Has the trend changed? And even though you might not catch the very bottom, we might with horizontal support, but if the trend ends, you can still buy in, and let's say it goes down to 40,000, you buy at 50,000, Bitcoin goes to 200,000. You don't really care that you bought it at 50,000. So it's about where the trend ends, and that's the most important part. We're also keeping an eye on the momentum band. So if you look at the Sensei momentum band, this will track the bear market. So below it, you're in a bear market. Above it, you're in a bull market. And in a bear market, you will just treat it as resistance. Look how, if we go into the weekly time frame to remove the jagged edges, because it's a weekly moving average, you can see what happened. You tested it and you fell 50%. What we're looking for is potentially testing that again. And if you look at previous cycles, this indicator is so easy to look at. In a bear market, it acts as resistance. In a bull market, it acts as support. So you look at 2021, bear market, resistance, 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 resistance. You got a back above it, support, 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 and it'll do support throughout this whole bull market. You look at it the cycle before, very easy. Below it, we were in a bear market. And then as soon as we got back above it in 2020, bull market support, support, support. We stayed above it. You were on the right side of the trade. You were on the right side of the trade. And then in the bear market, it was a resistance. So these trends help, and the Sensei momentum band will help with that. The Sensei deep trend, if you look at that sort of calls the bottom of the market. That was the bottom in 2018, the bottom in 2020. It does deviate towards the below it as well, but again, it just shows you at a high value area. It acts as a support, and currently that support is sat at 58,600. Which is coming close to 60,000. So yes, we can head below it, but when we're at these levels, they're not bad buying opportunities, and that's actually what we use to buy XRP at 112 and take it up to 160 the next day. So 60% moves based off one indicator. We're calling the Sensei Deep Trend, and we'll be giving that as part of the training course. So I kind of like to refrain from giving like daily price targets, especially if there's not a massive thing that's going on. If we break a structure like we did on March the 4th, I'll say, okay, I'm expecting Bitcoin to go up today, but there's not really anything. We're in the middle of no man's land. Are we going to 74,000 or we come back to support? We are expecting to go to 74,000 because that's the direction the trend broke to, but there isn't, we're not breaking a trend. We're not breaking a support level right now. So I will refrain from giving targets on the day. Because I think people need to zoom out a bit more rather than just focusing on the day every day. Anyway, that's my thoughts on that. Let's have a quick look at the rest of the market. Oil up. Again, with oil, double bottom on oil at $55. We presented that in the newsletter. Then we had the breakout at the trend breakout at $61, and the final trend breakout at $71. And then I said it's going to be volatile. I want to be on the upside of it. I think it's going to hit these targets. So what we're going to do, I'm going to use the poly market markets, which I hadn't really thought about using before, but I thought actually I don't want to be bothered with doing call options or long positions because it's going to be volatile. I just think it's going to hit certain levels. So then I opted for using the poly market, which again, you have to be careful with the rules and everything, but essentially is oil going to hit 120 by the end of March? Is oil going to hit $100, 110, 90, and 80? And I put my money on all of them because I thought, yes, it is going to hit those levels. Again, I'm not going to be 100% sure, but I thought the odds were in my favor when the war broke out. And yes, this is before we actually hit the take profit. So this is when oil was at, and let's say this one I put $20 if it's going to hit 120, and the win was 170. So that's 1,000% gain, and it did hit $120. And I sold maybe slightly before on Sunday before it hit 120, but I still realized those gains. So some of them were 1,000% gains, like that top one there, and some of them were 200% gains, like the $90 target. So again, that was based on the charts, which was double bottom at 55, the breakout of trend, 2 trend breakouts, plus the war. I mean, you couldn't be more bullish. But also, I knew it's going to be volatile. I knew we're going to go up fast, have a short squeeze, and then we can come back straight back down. So I don't want to be stuck with trying to figure out which day that's going to happen within the month with a call option. And I don't really want to be missing it when I'm overnight or out of hours trading opportunities with long positions or CFDs. So I chose that market. Again, not financial advice. That's what I did, and I shared it with the private community. So what we're going to do now is end the show and go over to Martyn. So if you liked anything that's within the newsletter, I do recommend you guys go check it out. There is a free trial. There might be a price increase once the trading course comes out, so you can always try and get it before that happens. Any final comments? Martyn will be live. Oh, let me close the poll. It changed motto A team's life. Are you bullish on American crypto? You can, again, if you look at the chart training course, you can apply what I use. I prefer medium and long term. Some people might prefer short term and day trading, and you can use the same principles. They're just more risky if you do it on the shorter time frame. Does your prediction on Bitcoin bottom change if the Clarity Act passes? Not really, because these events are good long term. Short term, they will have an effect and the price will jump, but also we need to keep an eye on the 4-year cycle, which would suggest we will have 2 more capitulation events plus the state of the market. So Clarity Act, just like the XRP story came out, XRP is not a security. That came out, the markets boomed, but then the broader market was going down. So we went into a bear market. We shot up to $1 when they won the case. And then we were back down at 40 cents for another 3 months. It was great news, but the market wasn't there yet. But then XRP went to $3.40. It blew past everyone's expectations because it had that clarity in place. So the clarity act will be bullish on the day, it will pump. If we're still in the bear market, it will just dump again. And then in the real bull market, it will allow the asset to go up higher in price. So thank you guys for tuning in. I'm going to send everyone to Martyn now. Martyn's going to be live. Please tell him I sent you. There is the link right above here. So Martyn is, I assume his countdown will be live any second now. So I'm going to give you Martyn's link to show. AWH, you have to use a VPN. Again, that's not me recommending it, but that's what people say. That's the link to Martyn's show, and this is the link to the newsletter. Is the S&P 500 crashing further? Yeah, it's down 0.6. Look, you know my thoughts on the markets. It's going to be volatile. It's probably going to trend towards the downside. I'm not all in. I've got money on the side. I've been preparing for this, although still being invested. On my actively managed part of my portfolio, which is essentially the portfolio challenge, most of the money's in cash, waiting for opportunity, or in defensive plays. Cheers, Sensei. Great show as always. Thank you. Thank you, RB. Have a great day, Sensei, to all the viewers and listeners. Thank you, RB. Lovely to have you here. Motto A team. How do I get those indicators? Motto A team. So if you want the indicators, you can send me a message on Substack as a private message. If you're a premium member, we'll sort it out. But yeah, I'll be releasing it to everyone in the next 5 days. But if you want to get ahead of the game, essentially don't set up the TradingView account if you haven't already. Message me first, and then I can set it up for you. But I'll explain to everyone. SPY crashing further looks super useful. Yeah, it's a great indicator. Appreciate Mark. Where would the floor be on SPY? Well, you can check it out with the indicator. I'll show you later. Martyn's going to be live now, so I need to end the show. Yeah, his show has started, so I'll send everyone there. Yolanda, thank you, Sensei. No worries. Thank you, everyone. I hope you enjoyed the show, and I'll be back tomorrow with PCE. So mark that in your calendars. You might have to wake up a little bit early, so about an hour ago. Set your alarms for 1 hour. 1 hour ago tomorrow, if that makes any sense, because that's when PCE will be released, and also GDP figures, and the market's coming down as we speak. Everyone enjoy Martyn's show. He's got an XRP show planned for you. Keep an eye on the newsletter and that trading course coming out. Until next time, make sure you go to Martyn, say Sensei sent me. The link is pinned above. What was the results of the poll? The poll, you guys said the April, May 34%, August plus 29%. So some people saying, yeah, no one's saying short term, so that can have a real impact on the market. The longer the war goes on, the bigger we have issues in the market. Take care of yourselves and each other. Bye-bye.